Morning, afternoon, wherever it is that you are in the world, guys. Keith at Crypto Bullseye. I hope you're all having a good day. So this is a major update on Gala because Gala is about to do something and it's about to hit a key major level. We took Gala on this channel down this level here. We got the break, we got the close. We took this level, and from where price action is now, that's an increase of 215% to the upside. So first things first, remember, wake up in the morning, ask yourself the one key question: what happens if I lose everything today? And this isn't me showing you what you should do. This is not me showing you whether you should get in Gala, at what point you should get in Gala. This is me showing you how I can preserve my capital to teach you risk management techniques so you can preserve your capital and have the best possibility of success during the next crypto bull run. So there's two key significant areas on here. I'm going to take profits at one significant area, and I'm going to be preserving my capital at a different area. So two key areas on Gala. Let's dive in. What we're going to do is we're going to go through this trade, the thesis behind the trade, and then the mindset between investing and trading. Because you've got to remember, guys, this is a swing trade. It's not day trading. This is swing trading. It's not investing. It is swing trading. So it's a smaller to mid-term horizon. What we'd seen on this was an opportunity. We'd had an opportunity because we were accumulating this level for such a long period of time. And when this level holds for a long period of time, it creates a strong base of support. And it also creates a risk management where you can preserve your capital with the limited amount of risk possible. So we'd seen that opportunity down here, guys, when we put this trend line on there. And I'd said the significance of this break and the significance of the close was that the bulls had got momentum at this point, and the bulls had regained control for the first time in about 2 weeks. They'd popped their head up. So that was the perfect time for the trade, and that was the perfect time to preserve the capital, because if we were wrong, we know that this accumulation phase of 136 days, which is held for 136 days, was our best possible chance of holding. So we had a strong support base, and if we were wrong, we had the limited amount of capital at risk. So we managed to get this. We got the trade here. And then I was saying we were putting trailing stops along the way. Say we, this is me, putting trailing stops along the way. So if you're in a trade and you wonder what a trailing stop is, let's go through these swings. From here, you've got a swing up here, then you've got a swing low. That is your higher low, guys. That's confirming a new support base. This was previous resistance. That's confirming a support base, because that's held support and put another swing to the upside. What that allows for is for you to put your stop loss. Remember, the first thing that I've done, guys, break even. That's the first way that you can preserve your capital. Once you've put in a higher low, you can preserve your capital. I've done that on the channel on the second video. So I preserve my capital, and then the next thing that you do is put your capital higher once you've put in a higher low. We put in a new base. We know that if we're wrong down here. So we can put profits in there. And if we're wrong, we can at least bank some profits rather than it coming back down to break even. So the first thing that we've done is we put our trade in break even. We've put in a higher low. That's allowed us to do that. Second thing you've done, continue to the upside, put in a new high, come back down, higher low. What's this, guys? This is your new support base. How do you know? Previous resistance, flip support. So what does that do? It allows you to put your stop loss once you've put in a new swing high here. So that allows you to preserve your capital again at this point. And we carried on doing it and carried on doing it and carried on doing it. But I'm at a significant area now where I'm taking 50% of my profits off the table, guys. This is the key area. We've got the 6 cent level. Now, 6 cents is going to be a psychological selling area. And 6 cents is also the 618 of the previous swing high. There's the high. There's the low. There's the 61.8. And you can see where price action is now. So I'm taking 50% off at this level here, and I'm going to front run the market, and you can see it's pretty much touching it now, guys. As soon as I finish this video, I'm going to be taking 50% off. See, about the 0.5823, pretty much where we're at now. So I'll hurry this video up. Right, the next thing that I'm going to do, guys, 50% off the table. So 50%'s riding. If 50%'s riding, that means if we get another high, that means that I'm going to continue this trade and continue banking profits. However, if something happened and the trade reversed, and we come back down and done something like this, then it would have made sense if I took the whole amount off at this level. So what I'm doing, guys, is I'm preserving my capital by protecting myself below the low of this candle. This is the open. That's the extreme low of the candle, and I'm protecting myself here. That's 5 cents. So if I'm wrong, and I'm getting stopped out at 5 cents, and that would mean that the first part of the trade from here would have made 192% at 50%. And then the second part of the trade, if it got stopped out at this level, 152%. So it'd be averaged out. But if we continued and put in a new high, that 50%, what's that doing, guys? It's rolling the trade. It keeps putting in highs. The trend's your friend till the bend at the end. And then once you put in a new high or low, preserve your capital, continue up until you get stopped out, until the trend's not your friend. You take out this previous low, trend's reversed. So that's what I'm doing, guys. The key two levels, 618, guys. So that's just under 618. Like I say, I'm front running that, and below this candle, which is sitting at just under 5 cents, just over 5 cents. So that's my protection zone. That's where my trailing stop's going up. That's where I'm taking profits. And that's how I can protect myself during a trade. So if you did find it useful, guys, don't forget, subscribe to the channel. Thank everyone for subscribing. 6,919, just lost one. Thank you for that. Take care of yourself, and goodbye from me.